Prospectus Review 1, American Funds, Growth Fund of America, and here's the ticker symbol. This is Ken Boyd, the owner of St. Louis Test Preparation. Here's our Facebook page, St. Louis Test Prep, the website, stltest.net. There are a couple sources I use for this analysis. A good article from Forbes from August of 2012 about the largest mutual funds in terms of assets, the Morningstar page for this fund, the American Funds Summary Prospectus, and the disclaimer here: investors should carefully consider objective risk charges and expenses. This and other important information is contained in the Fund Prospectus Summary Prospectus, which you can obtain from a financial professional. Should be read carefully before investing. Past performance is not indicative or predictive of future performance, and this presentation is for educational purposes only. So, let's go to a couple of website sources. I'm going to go to Morningstar, which has been out for years analyzing mutual funds and other investments. So here's Growth Fund of America. What's defined as NAV is net asset value, which is simply the dollar value of the sum of all the assets in the fund, in this case mostly stocks, divided by the number of mutual fund shares outstanding. We find out later about a load. This is a sales charge or the sales load that's charged to investors, 5.75%. Expenses represents the annual expenses charged every year. That's different from the load. The load is a one-time fee or a fee that can be spread over a few years. We'll see that more in the summary prospectus. Whereas the expenses typically is defined as annual expenses that are charged every year. There's a difference. The turnover is, as a percentage of the total assets, how much of those assets are sold every year. So if you had a turnover percentage of 18%, that means that if you had $100 invested, you would sell $18 of that $100 every year and go out and buy something else. The category is, it's a large growth fund. So it invests in larger companies, and we measure that by market capitalization. How much stock do they have outstanding determines whether a stock is large, medium, or small. And it's a growth stock, a stock that's primarily has a goal of growth. So as is typical with Morningstar, it says, well, what's the growth of $10,000 over the past 10 years? And you can see several lines here. The blue line is Growth Fund of America. The green line is the S&P 500, a basket of 500 of the largest stocks that is put together by Standard & Poor's as an index. You can see that's the green line, which is a little bit underneath the Growth Fund of America line. And then the, I guess I'll call it an orange line, is the large growth stocks, which is an even broader measure, a bigger basket of stocks that we consider large growth. And so you can see that over time, Growth Fund of America has slightly outperformed both the S&P 500, which is the green line, and the large growth stocks, a bigger basket, which is the orange line. Morningstar does some other helpful things. They have this style map, and you can see that on the vertical axis, it talks about the size of the company from micro at the bottom to large and giant at the top. And along the bottom, we go from GRW, which is growth stocks, stocks that are positioned to grow, growing earnings and dividends, versus value stocks that probably grow less, but maybe are more stable, so to speak. So you can find out more about the style map by clicking around here. But what you see is that if you take a weighted average of the holdings, which is this blue dot, you can see that it's large stocks in the top right-hand corner, and it's high growth. They also grade the analysts themselves, how long they've been at the fund. They give you performance, and they give you performance over a variety of timelines, year to date, month, year, 3 years, 5 years, 10 years. They have an asterisk there and tell you that once you get past 1 year, that is an annualized return. So they compare the fund, which is this line, with S&P 500. So this data here is similar to what we saw on the mountain chart up here. That mountain chart is for $10,000 over 10 years. We can get the same $10,000 over 10 years down here. The growth here is the dollar amount that the $10,000 has grown to. So $10,000 10 years ago is now worth $24,000 and change. This is a percentage rate of growth. And so you can see that there's more data here that's a little more complex. Where does the fund have their cash? And again, this is Morningstar, so this is updated pretty frequently. And it says U.S. stocks, which is the dark blue part of the pie, is nearly 75% of the assets in the portfolio. The next one being non-U.S. stocks. Probably harder to find large stocks outside the U.S. That's one reason it wouldn't be as big. And then cash, a little under 9% cash. They'll give you top holdings, Amazon, Google, all recognizable names because these are large stocks. They give you sectors that they're participating in, types of companies or industries. You can see that there's healthcare, consumer cyclical stocks are those stocks that move up and down as the general economy moves up and down. That's a cyclical stock. Technology and energy industrials might be more manufacturing companies. Now, there's an interesting thing that we're going to see when we get to the summary prospectus, and that is that these funds generally distribute dividends and capital gains at a certain time of year. In other words, it all tends to come at once. I think we'll see in the summary prospectus that this fund happens to distribute a lot of this in December of the year. So what you give you here in the bottom left-hand corner is distributions so far for 08, 09, all the way up to 2012. And it tells you what the dividend income is, what's return of capital, which would be return of your original investment. So for example, on 12/19/2012, we can see that the fund paid dividend income and that the total distribution 0.2830 was all considered dividend income. In other words, none of it was long-term capital gain, none of it was short-term capital gain. That was not distributed to the shareholders, which implies, and we'll see in the prospectus, that that was reinvested. But you did get the dividend income. The tax laws are rapidly changing, but generally that dividend income is going to be taxed at ordinary tax rates like your income, your W-2 income. So now let's jump over to what American Funds has on their website, the first page about this fund, and it says detailed fund information. Gives the net asset value as of yesterday. I'm doing this video on May 21st. Gives you the objective, which is important. The objective of the fund is to provide growth of capital. It has the flexibility under distinguishing characteristics to invest wherever the best growth opportunities may be. So by prospectus, the fund gives themselves some flexibility. Types of investments, at least 65% invested in common stocks. We saw on the prior page, if I go back up to the top here, that right now, 78% of the assets, or 75% almost, of the assets are invested in U.S. common stocks alone. By prospectus, it says at least 65% of the assets in common stock. It says may also invest in convertibles, preferreds, U.S. government securities, bonds, cash equivalents. So the fund gives themselves the flexibility of investing in things other than common stocks. And it also says we can have some non-U.S. holdings, up to 25% of the assets. Issuers domiciled, that is headquartered outside the U.S. If I go back to Morningstar, right now that's 15%, and by prospectus they can invest up to 25% in those assets for companies headquartered outside the U.S. You'll see that dividends, capital gains are paid in December. If I jump back to Morningstar, you'll see at the bottom here that we saw December distributions, and in recent years all that has been dividend income. No gains have been distributed, and no return of capital has been distributed. Fund's inception, been around a long time compared to most funds, 1973. And then I'll wrap up today by talking about what they call expense ratios, which as a percentage, what is the percentage of annual expense that comes out of the fund? It's 0.71%, and it compares with an index, a Lipper index, which says the average large cap fund has a 1.25% annual charge. So compared to that, Growth Fund of America is lower as far as a charge. That's as far as we'll get right now on the fund. You can go to my website for upcoming live chats where I discuss in a live format these prospectuses. If you go to the website, stltest.net, you'll see a page here on the right that I'll be putting up that shows you live presentations that we'll do. We'll present the information in the prospectus again for educational purposes only. Thanks very much for watching, and we'll see you next time.